Equity markets are at a very interesting phase. While markets have done exceedingly well in the last 12 months, we have to see the markets in the context of what they have delivered in the last 5, 7 years. India, in our opinion, is coming out of a structurally weak earning environment and entering a very strong phase of growth for a large number of businesses. Most of this can be seen from the fact that unlike earlier, where only 2 or 3 sectors used to account for all the profit shift, today we are seeing profitability improving across sectors. So, for example, what happened to pharmaceuticals in terms of improvement of profits also happened to information technology companies, then followed on with metal businesses starting to show very sharp improvement in profitability, where profits, in fact, have been multiples of what they were actually in the last 4, 5 years. So this significant shift in profitability across bodes well for Indian equities from a medium-term point of view. Very interestingly, the earning growth trajectory in India, the overall earnings as a percentage of GDP in India, which had collapsed to a very low number in the last 5 years, have started to revive. And I think they will directionally be on a much stronger wicket in the next few years, given the underlying earning shifts which we are seeing. All this means that for investing in equities, there are significant multiple opportunities which are coming through, and the markets are actually reflecting it by becoming much more broad-based, and you've seen now participation happening across sectors. A broader market with the earnings coming from a larger cross-section of companies makes or provides us a view that it is far more sustainable than a narrow market where earnings were pulled up by only a couple of sectors. So all in all, you might see the recent rally as a very, very sharp rally and valuations becoming expensive. But I think from a medium-term point of view, where the earnings base in India is today, and the outlook for growth, which is coming both from domestic as well as international global growth in the economy, I think all of this together should support a strong earning momentum environment for large businesses, which actually is a very positive for the broader equity markets. The recovery of global growth, which was very, very muted in the last several years, has also been a very important contributor to the significant uptick in profitability of Indian businesses. If you look at it, a meaningful part of earnings of large companies in India is derived from what happens to global prices of commodities, what happens to global demand, especially say in IT services, pharmaceuticals and engineering exports. So when you see it in context, a very strong global recovery bodes well for increased capacity utilization in India, better pricing for its manufactured goods, and overall much better profitability. After years of a drought in terms of scale up of manufacturing in India, we are seeing, for a multiple of reasons, the whole economic activity towards setting up manufacturing capacities coming together and possibly creating a platform for many, many years of growth. If you look at what happened in India in the last 7, 8 years, has been very little incremental investment or capex, primarily because India was utilizing the capacities created in the 2007 to 2010 cycle. In the last several years now, capacity utilization for several categories has started to improve, and now the need for capacity is becoming urgent. The basic shift of global buyers wanting to source more from India as against China, I think, is becoming a very important structural theme for manufacturing, because global suppliers want to diversify away from just one large source, given the challenges of what has been seen and witnessed in the last few years. Also, importantly, the real equation in India in terms of port infrastructure, in terms of policy support, like, for example, you just need to pay 15% manufacturing tax or income tax for new capacities set up before FY23. And the overall tax rate in India has also been reduced by the reforms which have been carried out. And all this supports investment and capacity creation, which I think will be a most important driver for overall economic growth in the next few years. A manufacturing-led recovery for the economy bodes well for significant investment, which generally bodes well for overall growth and overall broad-based growth in the economy. The low base of earnings in the last 5 years creates a fantastic platform for recovery in earnings and growth, supporting equity investing for the next 1 to 3 years in India. So Nippon Large Cap Fund is focused towards high conviction investing within the large cap space, specifically being focused on consolidators, because we are finding significant shift in profitability of consolidators in different sectors, and also on specific medium-term themes like engineering and manufacturing theme in India. In the large cap fund, the clear focus is towards companies who will benefit from the undergoing consolidation and profit improvement, which is visible today across sectors in India, whether it is financials, whether it is manufacturing, or whether it is telecom. In fact, a large part of market share and profit share of India's as a country is being captured by these large companies. And this consolidation bodes well for longer term returns and return on equity for these large cap businesses. The focus of the fund is to take high conviction bets in these specific areas where significant improvement in economic activity and a scope for earning growth is there. And the emphasis of the fund is to identify these kind of categories and areas and stay overweight in these areas. Let me take you through one important theme in the large cap space today, which is the manufacturing theme. Manufacturing as an opportunity, it is at a cusp of a very big change in India, because we are coming out of a manufacturing drought and possibly entering into a phase where you could have many years of investment and growth coming from large companies and mid-sized companies increasing their capacities. What is important in this space is that given that the space has very few leaders, the next level of growth will lead to significant change in profitability of large cap businesses in the space. And hence the emphasis of the fund is towards focusing and capturing that value. So given that the fund invests in generally the top 1 to 3 players in each of these categories, you would find that increased market share, increased profit share would mean much better earning growth for this segment of the market versus the other pockets of the marketplace. Hence, that provides an opportunity for investors to capture meaningful opportunities in the large cap space. Interestingly, the growth in the large cap space in earnings has also been very strong, and the way they have captured larger profit shares in each of their subsegments of the market makes them very attractive within the available investable universe. The liquidity of these businesses and the stability of these businesses, along with the growth prospects, is captured in the Nippon Large Cap Fund. So Nippon India Large Cap Fund is focused on high conviction bets in specific areas where there are significant profit shifts and earning growth possibilities. A couple of areas where the fund is overweight is manufacturing and large cap banks, where we are seeing a material improvement in profitability and growth given their strong positioning and profit share gains. Another area where the fund is overweight is telecom, where we have material opportunity because of consolidation happening, leading to much larger growth in terms of number of customers for the leaders in the sector, as also a shift in profitability. The focus of Nippon India Large Cap Fund is to capture such profit pools from a medium-term point of view, and with having overweights in areas where there is greater conviction as against the index. The fund also focuses on structural growth opportunities in India where there is significant underpenetration, like life insurance and such categories, which are secular in nature and which have significant long-term opportunity. Because of what has happened in the market in the last few years, I think the need for the growth in these particular sectors is starting to improve significantly, which presents an interesting opportunity to participate in. The fund has material overweights in specific themes versus the index, and hence the portfolio is differentiated versus what the index actually offers, which creates an opportunity for investors to benefit from what can happen in the market in the next 3-4 years, rather than what has worked out well in the last 3-4 years, which generally an index captures. Given the attractive long-term opportunity in investing in equities in India, investors can consider the fund as a part of their asset allocation strategy and their long-term wealth creation journey in India. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.